Hello, so this is for the subject Church Financial Management, and we are now on Chapter 8, Audits and Other Financial Accountability Activities. Okay, so before we begin, a bit of a review. In the previous chapters, we discussed internal controls and ensuring that the financial records are complete, accurate, and provided in a timely manner to the decision makers. So essentially, that constitutes the financial accountability that is the responsibility of the church management. So again, that's completeness. All the transactions that occurred must be recorded by the church. And then the second one, accuracy. So aside from the records being complete, you have to make sure that they are recorded correctly. Okay, so no errors, no manipulation, no fraud occurred in the recording of the transactions. And then the last one is to provide them in a timely manner to the decision makers or to the management of the church itself so that they could use the information for their decision making, probably for planning, for financial planning, for budgeting, or for changing anything, being able to prioritize the programs that they're going to do in the coming year, or in their what do you call it, strategic plan, to incorporate the information in their plan for the next 5 years or 10 years or so. Okay, so before we continue, I'm going to show you a simple way to record church transactions. So this one is actually based off the GBC records. So we have the receipts and the disbursement. So essentially, these are the two records that you must maintain as a church, or as a missionary. So for these records, let's begin with receipts. So these are data encoded from official receipts. Okay. Um, for example, sorry. So as a church, you do receive contributions, tithes, offerings, donations from the members or from the guests or from anyone who'd like to give to the church, right? As a legally registered corporation or entity, the church is provided with, booklets of official receipts. So in the case of here in the Philippines, any registered corporation must also register with the Bureau of Internal Revenue, or BIR. And then they are required by the BIR to get an authority to print official receipts. So they would go to an accredited printer by the BIR so that they could print booklets of official receipts. Whenever the church receives a, you know, um, cash or money from someone, be it, tithes, offerings, donations, they must issue an official receipt. Okay. So on that official receipt, the information that you have to write there, you have the date, when did you receive the money, and then you have the payor or payee who gave you the money, and then you have the OR number, or official receipt number. This is a control number, and it's normally printed on the OR. Okay, it's serialized, so the first is 0001 normally, and then it's chronological number. So you have 001, 2, 3, 4, and so on. Okay. And then you have the particulars. In the particulars, you have to describe, or just input what kind of receipt it was. Okay. So you have to distinguish whether it's from tithes, whether it's for the building fund, whether it's for the missions, whether it's for the vehicle, or any other. If it's for a specific purpose, then you have to specify that. But if not, then you can just put it as offerings or tithes. Okay. But if there's any, specification, then you must include that. And then after that, you have the cash in bank or the amount that you have received. Okay. In the case of Sunday services or, prayer meetings, I think during prayer meetings, it's just, a simple offering. So you can just put the date of the prayer meeting, and then for the payee, since it's, the whole congregation, and then so you can just use the name of the church or, the name of the mission. And then for the particulars, so you have that either prayer meeting offering can be very specific. And then after this one, if you can see here, the there is also a segregation on which fund that particular receipt would go. Okay, so in the cash in bank, of course, um, this is a simple record to show that all the receipts would go into the bank, right? But for the specific allocations, they have to segregate. So let's say this is tithes. So it should appear under the general fund, and then for a particular column of tithes, okay? And then if it's for the Wednesday prayer meeting, so you'd have to put it under the specific column that it pertains to. Okay, so if it's for the Sunday school, you put it here. If it's a donation, no specification, put it here. If it's, miscellaneous or other receipts, you can put it here. Okay, and then you have the total. This is normally with a formula already, so you don't need to um, do anything with this. And then you have the building fund. So if the receipt is for the building fund, regular, sacrificial, Thanksgiving offering, so you can segregate them into these three. And then you also have the total. Don't need to do anything with this. Okay, automatically computes. And then you have the mission fund. It's either from the faith promise, from the mission fund. Sometimes people would, what do you call it, directly make donations for the mission fund, and then other times donations without specifications. Okay, they want it for the mission, but no specific specification on to whom it would go. So you have this. Okay, all right, so you have these three for the mission fund, and then for the vehicle fund, it's only one. Okay, but if you have like segregations, let's say it's for the jeepneys, for the vans, or for a tricycle, if you have that specification, then you can also provide that here. Okay, and then you have the total, and then you have the running balance of the cash in bank. Okay, before that, let's interest on bank deposits. If you are keeping the funds of the church in a bank or bank accounts, then normally it would earn interest on the bank deposit. So sometimes it will depend on the bank. Sometimes they credit interest on a monthly basis. So at the end of every month, there's interest that's going to appear on the bank statement. So if there is, then you should input that in this portion. And then you have your tax and bank charges. Normally, whenever there's interest on bank deposits, there's a corresponding 20% tax on that interest. So you also have to record the corresponding tax and bank charges. Okay. For the running cash balance, let's say at the beginning of the year, you have to input the amount of, the ending cash balance from the previous year. So December 31, it would be carried over to January 1 of the current year. And the main point of, having a running cash balance is that you know how much cash you have at the beginning, and then how much cash you receive uh, up to a certain date. Okay, so let's say this is the latest date after you've recorded every transaction to date. So you would know that this is the total cash that you had. Okay, the beginning and then the receipts. Okay, but this is not exactly the amount of cash that you currently have, because you have disbursements. Okay, essentially what this is telling you is that you receive this much cash for the year. Okay, this is the amount of cash that you have available for the whole year, or for up to that date that you are already recording. Okay, other times you would receive cash because you have accounts receivable. Accounts receivable, let's say the church lent money to an employee or to a worker for, let's say, emergencies. They have need of the money. They have need for the money, and the church deemed it fit to lend them some money. So the worker would have to pay it back since it's just a loan or a borrowing. So the church may receive payments from that. So it would fall under accounts receivable. Okay, it would not go into the specific funds, general, building, mission, or vehicle, because it's simply a repayment of the borrowing made by an employee. Okay, and then property and equipment that I'm not sure about this one. Uh-huh. Normally, essentially accounts receivable, if you did lend money to a worker and then the employee repays the loan, it would also form part of the general fund essentially. And then for property, plant, and equipment, maybe if what do you call it? Instead of receiving cash, okay, um, certain receipts would also be in the form of non-cash receipts. Okay, let's say the church received a vehicle as a donation. So instead of putting it under cash, okay, you would put it here under property and equipment. Okay, they have these, and then for this date, it's normal. Of course, the usual practice is to record them in chronological order, okay, as it happens. So, first day of the year, so January 1, if there's a transaction, you record all transactions that happened in January 1, and then January 2, all of that, so on and so forth. Okay, you have to make sure that the OR number, the ORs, official receipts, are issued, what do you call it, one after another, or again in a chronological order. Okay, you can't use the first booklet and then use the last booklet. Okay, that would be against the rules of the BIR as well, because in a way they have a mandate that you must issue an OR um, with what do you call it, with using its sequence. Okay, so this must be properly sequenced. And then again, your basis for recording would be the source document. So in this case, the source document is the OR. If the church received something, it must be given an OR. Okay, if there's no OR, then it would be a bit questionable if a certain amount appears here without a corresponding OR number. Okay, it's possible that you forgot, the bookkeeper or whoever is recording forgot to issue an official receipt. So in that case, you might find, let's say, 221 or 221, but then the date is some date in the past. Let's say it's already May. Okay, it's already May, but then there's a receipt from February that you forgot to issue a receipt. So the receipt number would appear here, but the date, if you would notice, would be dated February. Okay, so the date would be kind of questionable, but as long as you can properly explain why it happened, okay, why it was only given an OR 3 months later. So, errors happen, but as long as they are not intentional, there's no intention of, defrauding the church, then it's okay. And of course, it doesn't happen often. It shouldn't happen frequently, okay? Occasionally, it's fine, let's say once a year or a few times a year, but it shouldn't occur many times. Okay. Next, we have the disbursements. Disbursements would involve preparing a check. Okay. Since the company's funds, the church fund, is put into a bank account. So any disbursement must be through issuance of check. Okay, so again, that's a kind of internal control. All the deposits, all the receipts must be deposited into the bank, and then for any disbursement, they must be issued with a check, okay, which is drawn against the bank account of the church. In that way, not only would the church have the records, the bank would also have a record. Okay, so in case, let's say, the church lost the records, then they can procure the records from the bank so that they can see the deposits in there, and then the disbursements. Okay, but of course, limited information. The records with the bank would be limited to the cash in and the cash out from the funds, but it's good enough as a reconciling, cross-referencing type of document. Okay, so when you're doing your cash reconciliations, you can, let's see, for example, this transaction here, this particular amount must also appear on the bank statement or on the bank records, okay, to ensure that it really happened or it really occurred. So for the disbursements, so you have your check voucher. In the check voucher, you have the date, the payee, who it is being paid to. Normally, if it's for the regular operations of the church, then it would be paid to a church worker to, disseminate. For example, Sunday service, so we have expenses for the food, the supplies for the craft, for the payment of jeepney drivers. Okay, so we don't directly pay the money to the jeepney drivers or to the market vendors. Okay, so we disburse it to one particular person, and then that person would be responsible for providing the documents. So let's say for the jeepney drivers, I think there's a paper with the list of the jeepneys, and then the drivers, upon receiving the payment, they would have to sign with on their name, and then the amount that were paid to them. So it would be used as a supporting document, a liquidating document, that the money was in fact given to the drivers. Okay, so and then, for example, for the kitchen. So for the kitchen, whenever they buy ingredients, of course, they would buy from the market, from the grocery store. So normally, the grocery stores, they do have official receipts that they issue, detailing what you bought from them and how much they are. Okay, so there's no problem with that. But in cases of market vendors that are simply selling on the streets, they don't actually have official receipts. But in that case, you can simply make a slip. Okay, essentially, it's understandable in here in the Philippines that we do have it's not exactly unauthorized, but unregistered vendors. Okay, and of course, it's very difficult to avoid doing that. Right? You buy vegetables from the market vendors, and they would be unable to issue you with official receipts. They can issue you with the slips. Okay, yeah, just a piece of paper, torn piece of paper, but as long as it's for purchases that are understandably of that nature, then there's no problem. Okay, but for example, you bought groceries, and it's what do you call it, known that grocery stores do issue official receipts, then there must be an official receipt attached to the document. Okay. So aside from the voucher number, you also have the check number. So for the bank, check issued, so you have to take note of the check number as well. Okay. And then aside from the payee, on the voucher, you can describe in further detail what the payment is for. Okay. So let's say it's for the church vehicle, jeepney, this amount, and then for the kitchen, this amount, for the crafts, this amount. Okay. So you can do that on the voucher. Okay. But for the check, of course, it's just the date, the payee, the amount, okay, and then the signatories. Okay, and then for the segregation, you have the asset account for the cash. And then here you have the liability accounts. If the payment is for these types of liabilities, okay, whenever the church pays for the salary of their workers, we have these mandatory deductions, right? You have the SSS, PhilHealth, Pag-ibig, and then sometimes they also have existing loans from SSS, Pag-ibig, and then others. So that would appear in this portion, liability account. It's liability because the church must remit these deductions, okay, these disbursements. And then church ministries, you have flower, funeral, jeep, kitchen, media, music, nursery, sign language, Sunday school, visitation, youth, four-piece youth, okay. And then it's this one, church expenses other than the ministry. So you have maintenance of aircon, book fund, booklet for hymnal, discipleship, building, church equipment, computer expenses, donation, UUS, fellowship, furniture, gasoline, pag-ibig, internet, lab gift, miscellaneous, okay, other expenses. So it would depend on the church how frequent they pay off this particular expenses. Okay, if it's very frequent, let's say on a weekly basis or on a monthly basis, then you can create a column for it. Okay, but if it's not really frequent, let's say once a year or twice a year, it would be better to just use a sundry column. Okay, or others. Essentially, it's others, and then you just specify the account it's going to. Okay. For a smaller church or for a mission that's just starting, so of course the accounts that would be involved would be limited. So it would not be as extensive as this one. Okay. So I'm going to pause this because it's been 20 minutes already. So the video would be long. I'm gonna do another one.